Good afternoon, students. Let us understand the process of credit creation. We could not discuss it in class due to shortage of time. Therefore, I am sending this video to you. So, how does the process of credit creation takes place, students? It's a matter to understand over here, and we have made certain assumptions for explaining this over here. The first assumption is that there is a single banking system in an economy, and second is initial deposits are rupees 1000, and CRR, that means cash reserve ratio, is 10% and it does not change. Okay, so single banking system means that there is only one bank, you can assume, and initial bank deposits are rupees 1000, and CRR is 10% and does not change. I told you what does the CRR actually means. So let's proceed further. Suppose a student, we have in the first round where we assume that any person comes to the bank and deposits rupees 1000. So bank firstly receives a deposit of rupees 1000 over here. Okay, so now since the CRR rate is 10%, so 10%, that means 100 of it, 100 rupees of it is reserved for CRR, and rupees 900 can be lent as loan, and it has been lended as loans by the commercial bank. Okay, that means total initial deposit 1000, 10% is towards CRR, and 900 rupees is the loans which they have created. Okay, now suppose if the bank gives loans to any person, 900 rupees loan he gives to any person. So it is an assumption made that when a person who receives the loan also goes to another bank and deposits it in his bank account. So we can either assume that this bank is SBI, and the person who receives the loans and makes payments to other persons, he goes and deposits this 900 rupees in, suppose, PNB. You can take example from this also. So the person who takes loans either takes loans for investment or for making a payments. So whenever he makes payments, it is assumed that the person who receives the payments goes to another bank and deposits that money into his bank account. Okay, so now in the second round, suppose here SBI had initial deposit and he granted loan of 900. Now it's ANB. Now that 900 rupees loan as a money has come into PNB. Okay, now what can the PNB do? PNB can also take reserve 10% for his cash reserve, say 90 rupees, and it can, out of this 800, as a 90% of this, that means 810 rupees, he can lend as a loan. He lends as a loan to other person. So now since the 10% reserve is initial, 10% is the CRR, so 10% of the deposits is, you can see over here 10% of 1000, here 9% of 10% of 990. So suppose this person PNB grants loan, now the another person who receives the money goes to his bank account and deposits it into third. Suppose the person who receives the money over here as a loan goes to ICICI bank. So okay, you can take it as another bank, any bank. Okay, he goes to ICICI bank, deposit rupees 110. So now ICICI bank, what can ICICI bank do? He will also retain 10%, that means 81 rupees. That means out of 10% of 881 rupees. So out of his 810 rupees deposits, ICICI bank also lends 729 rupees to another person. So the thing over here is that every time the loan is given, the new deposit is created, and this process goes on and on and on. And how long does it go? It continues till the excess reserves are exhausted. Till the excess reserves are exhausted, it continues till that. And so as a total, we can see that here is initial deposit is 1000, while total deposits are 10,000. Here initial loan is 900, but the total loans are 9,000, and here the CRR reserves is basically 100, but now it is 1000. So how is it happening? This is happening due to the credit multiplier system of the commercial banks. Now the question arises that how does this 10,000 comes over here and 9,000 come over here? Actually, you see, 1000 is the 10 times of 10,000, and 900 over here is the 9,000 over here is the 10 times of 900, and so as 1000 is 10 times of 100. So the topic to be understood over here, student, is that the credit multiplier system depends upon formula, that is demand deposits is equal to 1 upon CRR into initial deposits. Okay, this is the formula. So CRR is 10% over here, so 1 upon 10% into 1000, that is initial deposit is 10,000. And now as we work it out mathematically, we get 10,000 into 1000, it becomes 10,000. So demand deposits का total जो है, it is 10,000 over here. That means it's 10 times. Okay. So this is how the process of credit creation is explained. I hope you will go through this video and check the book. And if you have any doubt, ask me in the next session. We will be discussing.